It's all about earnings. Dixon Technologies reported numbers. It's actually a good quarter for the company. The outlook looks promising. The stock has been a street favorite in the recent past, trading with a gain of nearly 3% as we see it. So it's actually doing quite well and on a day when the markets are down. Saurabh Gupta, CFO of Dixon Technologies, now joined in. Saurabh, hi, it's Amina joining in. Saurabh, it's been a good quarter. The focus very largely from the company, what we understand, is on revenue and not profitability so much. And mobile and EMS has been the biggest sort of growth number that we're seeing year on year. It's up about 120%. Is that the right understanding? The focus of Dixon will be on a low margin business like mobiles, but that is where the key growth driver for FY25 could be coming from?
Yeah, so very good morning. So clearly mobile will be the largest trigger for our growth, mainly because the opportunity pool in mobiles as compared to the other verticals is the largest. And no doubt mobile is slightly a lower margin business, uh, both on the gross margins and both on the EBITDA margins. But the opportunity pool is immense, and we want to capture a large part of that opportunity. But it's not that the company is not focusing on profitability. In every vertical, we're planning to do more backward integration. We're planning to migrate more and more to our own design solutions. And also the benefit of operating leverage will also keep kicking in most of the verticals, including mobiles. In mobiles also, we have a plan for doing backward integration for display for smartphones. So clearly, the profitability is equally a focus, ROC is equally a focus, and management of current assets is equally a strong focus for the company.
What are the number of units you're targeting for FY25 in the mobile business? And also margins this quarter came in at 3.9%. If design, backward integration, operational leverage is expected to play out for the company, can we expect margins to go back to levels of 5, or that looks a little far-fetched at this stage?
See, 5% definitely looks difficult. 5% we haven't achieved in the last couple of years. And clearly, mobile is, as I mentioned, lower margin business, but definitely we can keep expanding the margins by 10-20 bips for next couple of years, mainly on account of the backward integration and operating leverage. And we see that expansion in mobile business, the margins also expanding in a mobile business, because from 7 million volumes that we have done in last financial year, we are now looking at a volumes of almost 28-30 million, along with some kind of a backward integration. But the backward integration results will only start reflecting in next financial year.
Saurabh, if you could just give us an idea about the benefits that are coming through PLI, the expectations for the upcoming financial year, and what sort of an impact can we expect when it comes to the bottom line going ahead?
Yeah, so Dixon, we are a beneficiary of 5 PLIs, the largest being on the mobile side, where we are working with the top 6 global brands. And we are also adding one more, hopefully I will add one more brand in the next 3 to 4 months. So we have a large play in mobile phones. The second PLI is for telecom and networking products. So again, we have a large order book both from the 2 largest telecom companies in India. Third, on the IT hardware, the Capex is being done, and this will be the first year for our revenues. And fourth and fifth PLI is on the components, both for lighting as well as for AC inverter controller board. So clearly, we are the largest beneficiary of the PLIs, and PLI definitely gives us a lot of advantage. Basically, it's a even outside the businesses which are under the which are not under the PLI. Clearly, there is a decent growth lined up in those verticals as well.
The Capex earmarked for this year, and in what areas are these funds being allocated?
Yeah, so last year we did a Capex of 570 odd crores. My sense is the Capex for this year broadly should be slightly lower than that. And also we have done an acquisition, which we are awaiting the approval of the Competition Commission of India. And hopefully we feel confident that by next month, we should be able to consummate the transaction and start consolidating the financials from July Q2 onwards. So there the Capex outgo can be another 300 odd crores. Yeah, so total Capex outgo can be somewhere around 650 to 700 odd crores for this financial year, including the acquisition year.
So I'm assuming you're referring to Ismartu and Compil, which is the acquisitions that you've done last month. I know the street was quite excited about that, and I think the management, I think Atul Lal did say that you would look at increasing your wallet share in the export market through these partnerships. Is that a fair understanding of what this acquisition could do for you?
Yeah, so this acquisition is of a company called iSmartu, which is a manufacturing entity for brands like Itel, Infinix, and Techno, which are the brands of Transition Group. Transition Group happens to be the top 5 companies in smartphones and top 2 companies in feature phones globally. They have a decent market share in India as well in both these categories. So yes, under this partnership, we'll not only manufacture for those brands, we look at manufacturing for other brands as well. And over a period of time, this relationship can be large for us, where we get into the component ecosystem along with them. We look at doing some exports from India. Yeah, so this can be over a period of time a large partnership for us.
What about BBK Group, which is China's largest phone maker? We believe there's been some development on that front as well. Any updates on that, and what could that do for your top line? When will that start turning revenue accretive?
Yeah,
And
so,
also, in that same breath, how do you plan to fund all these very aggressive backward integration plans that you've lined up? Is it all going to be through internal accruals?
So to answer your second question first, I think so clearly with the earnings visibility we have right now, and even in last financial year, if you look at the cash generated from operating activities, the Capex was entirely funded out of them. In fact, our debt levels had actually come down. This year also, we feel confident that the earnings will expand because of the order book that we have, and clearly the Capex can be easily funded from the internal accruals. Uh, on Oppo specifically, yes, we've already started manufacturing for them this month. Potentially, we are doing a volume of almost 4.5 lakhs, and we expect to, yeah, ahead of the festive season. In fact, these volumes can potentially go up, and yeah, so it's a large account for us.
And the stock is reflecting just that at the day's hype on Dixon Tech. Saurabh, great chatting with you. It's good to know that the outlook for Dixon looks as promising as the stock price at this stage. Good luck and congratulations once
Thank you.
again.